Hello and welcome back, and Happy New Year. It's January 2024. I'm Steve Murphy, a trust and estates attorney with McGuire Woods LLP, and this is Legacy Planning Once Removed, my podcast on estate planning, trusts, property, taxes, family legacy, and everything else on my mind. We try to make these episodes evergreen. That's a term I heard on one of my favorite podcasts. What we mean by evergreen is that it's always relevant. It's not bound by time or current events. But one challenge in this area of the law is that the laws are always changing. So it's January, and you know what that means. It's time for inflation adjustments. The IRS puts out inflation adjustments every year. They actually post those at the end of the year. But I announce those inflation adjustments in January because I don't want my clients getting confused about what the applicable number is for a given year. And as we'll see in our next episode on annual gifting, it's often best to start this type of gift program early in the year. So January is a good time to be thinking about these issues. So here we go, the inflation adjusted numbers for 2024. First, there is the estate and gift tax exemption amount. That's the amount that you can give during life and upon death without paying gift tax or estate tax. In a prior episode, I talked about this like a meter. Each year, as there are changes in the law or inflation adjustments, you might get more exemption, and that meter goes up. And then as you make lifetime gifts that use exemption, that meter goes down. And then upon death, the remaining exemption, wherever your meter is what you can use to avoid estate tax. Currently, that exemption is $10 million indexed for inflation. So for 2024, that number is $13,610,000. Remember that this number is per individual. So spouses essentially have double the exemption through coordinated gifting or a process called gift splitting or a process called portability. And all those are the subject of other episodes. And this increase in the exemption means that for clients who used all of their exemption in 2023, they just got a nice little bit of additional exemption. So if they want to make gifts, and that's a big if, as we've talked about on these episodes, and if that gift is dependent on their goals and gifting program, which again, we'll talk about a lot more here on Once Removed, then they can make that extra gift as of January 1 without paying gift tax. So in sum, the estate and gift tax exemption for 2024 is $13,610,000. Keep in mind also that at the end of 2025, which is just next year, this exemption is scheduled to be cut in half to $5 million indexed for inflation. That will happen unless the law is changed. So keep a lookout for changes in the law over the next 2 years. Second, there is a GST tax exemption amount. For gifts to grandchildren and other beneficiaries more than one generation below you, that's the amount that can be used to shelter gifts from generation skipping transfer tax. That's a separate type of tax, which we've talked about on another episode. That's a separate meter for the GST tax exemption, but it's the same starting point. That is, for 2024, that exemption amount is $13,610,000. And that number is also scheduled to be cut in half by the end of 2025. So again, stay tuned. Third, there is the annual exclusion from gift tax and GST tax. This is the amount that you, an individual donor, can give to anyone in the world without using up any gift tax exemption. That number is $10,000 per year indexed for inflation. It started getting indexed for inflation in 1998. That's just an example of how much these laws change. And that number is indexed in increments of $1,000. So for 2024, that annual exclusion amount is $18,000. That's the base number. You can give that to, for example, a child and his or her spouse and his or her children, et cetera. So that could be $18,000 per person, per donee, but you can make multiple annual exclusion gifts. Fourth, there's the amount of taxable income where a trust or estate reaches the highest marginal tax rate. We've talked about that before on another episode about fiduciary income tax. This adjustment isn't that big a deal for my clients. The overall point remains the same, that trusts and estates reach the highest marginal tax rate very early at a low level of income. For 2024, that number is $15,200. For income over that amount, the trust or estate pays the highest marginal tax rate, and there are certain other implications too. Fifth, here's an interesting adjustment. For IRAs, there is a way to make a tax-efficient gift to charity using a required minimum distribution. I'll talk about charitable giving in other episodes. But the law now allows you to make a particular kind of gift to charity from an IRA called a qualified charitable distribution, or QCD. So the problem was that if you get a distribution from an IRA, that's income to you. Then if you turn around and give that to charity, you get an income tax deduction. But because of percentage and other limitations on how much you can deduct, you might still wind up with taxable income. So the law allows for this QCD. It allows you to make that lifetime gift directly to charity instead of receiving it from your IRA, then giving it to charity. The QCD amount is indexed for inflation starting this year in 2024. So that number is now $105,000. There are other inflation adjustments that we talk about in my more in-depth presentations, like the calculation of the deferral of estate tax under Section 6166 and the marital deduction for non-U.S. citizen spouses, but I think we've had enough. I know I like to leave you with some thought exercises or homework, but in this case, I guess it's this. As we start the new year, it's a great time to think about ways to transfer wealth and to transfer that legacy. But taxes aren't the only problem we're solving for. And this isn't just a math problem. But then again, taxes are one of the problems we solve for. And sometimes there is a math element to this problem. So as you sit down to talk to your advisors about goals, and as you build out and start to carry out that program, keep these numbers and their changes in mind. I'm Steve Murphy, and this has been Legacy Planning Once Removed, my podcast on thoughtful estate planning. Thanks for tuning in.